Doesn't. Is it working? What's going on? I don't know how to do this. I really apologize to you guys because I just want to get onto the charts, you know, and start talking, but seems like I'm a bit stuck here. So you guys need to help me out. If you can talk to me on the live charts. What's going on? I don't know how to do this. I really apologize to you guys because I just want to get onto the charts, you know, and start talking, but seems like I'm a bit stuck here. So you guys need to help me out. If you can talk to me on the live charts. Let's see. What's going on? I don't know how to do this. I really apologize to you guys because I just want to get onto the charts, you know, and start talking, but seems like I'm a bit stuck here. So you guys need to help me out. If you can talk to me on the live charts. Let's see. What's going on? I don't know how to do this. I really apologize to you guys because I just want to get onto the charts, you know, and start talking, but yes, seems like I'm a bit stuck here. So you guys need to help me out. If you can talk to me on the live charts. Let's see. What's going on? I don't know how to do this. I really apologize to you guys because I just want to get onto the charts, you know, and start talking, but yes, seems like I'm a bit stuck here. So you guys need to help me out. If you can talk to me on the live charts. Let's see. What's going on? I don't know how to do this. I really apologize to you guys because I just want to get onto the charts, you know, and start talking, but yes, so you guys need to help me out. If you can talk to me. It's the first time I'm using this live streaming, so you know, it's a bit too. Oh, okay, I see. I think you can actually see my chart, but it's just that it's a bit, it's lagging a bit. Okay, so yeah. Okay, fair enough. So I'm just gonna. It's the first time I'm using this live streaming, so yeah, it's a bit too. Okay, guys. Now that you can actually see my charts, let's try and see if we can get the audio out of the way. So if you guys can hear me, if you can hear me, just yeah. So just let me know if you can hear me. Oh, okay, I see. I think you can actually see my chart, but it's just that it's a bit, it's lagging a bit. Okay, so yeah. Can you hear me? Can someone just say something on the? It's the first time I'm using this live streaming. So. On the chart, please, if you can hear my voice, if the audio is clear. Just okay, guys. Now that you can actually see my charts, let's try and see if we can get the audio out of the way. So if you guys can hear me. If you can hear me, just yeah. So can you hear me, guys? Just let me know if you can hear me. Perfect. Oh, okay, I see. I think you can actually see my chart, but it's just that it's a bit. Thank you, Enrique. It's lagging a bit. Okay, so yeah. Can you hear me? Can someone just say something on the? It's the first time I'm using this live stream. On the chart, please, if you can hear my voice, if the audio is clear. Okay, guys. Now that you can actually see my charts, let's try and see if we can get the the audio out of the way. So if you guys can hear me, if you can hear me, just yeah. So can you hear me, guys? Just let me know if you can hear me. Perfect. Okay, I see. I think you can actually see my chart, but it's just that it's a bit. Thank you, Enrique. It's lagging a bit. Okay, because I'm actually hearing my voice repeating. But can you guys let me know if you can hear me now? Because I've kind of just muted the echo. So let me know if you can hear me now, and we can get onto the trades. Oh, it's lagging. There's 2 videos going on behind. Okay, this. Okay, 1 second, guys. Okay, guys. I seem to be having problems with the. Okay, guys. How about now? I don't know why this is really complicated. I've never had any complications. I need to know if it's actually very. Oh, perfect. What about the sound? Can you hear the sound? If you can hear the sound, just let me know, Gantu. Okay, perfect. So we go on to the trend. I think what I done was I kind of stopped. I paused the other software that's meant to be streaming the video. So that's why that's why there was a problem. Anyway, so back onto the chart, guys. So as I was saying, I think a few seconds ago, I was actually just talking to myself because you guys couldn't actually hear me. But what I was trying to say is the fact that I'm just gonna go through a couple of the trades that I've taken with my traders this yesterday and obviously this morning as well. And I'm gonna go through like kind of the reasoning why why we took the trades that we took, and so as you can see on the chart here, I've got, you can see there's a position open. So I mean, the main broker I trade with is IG. IG is my main broker. However, like I said, you can't really link your IG account with TradingView, so but you can if you have an FXCM account. So I do have a small FXCM account, so and I actually prefer when I'm doing things like that for you guys to actually see the positions on the chart instead of like switching between platforms and so so just to look at the 2 trades that were placed, I'm actually going to start with the EuroCAD. So the EuroCAD, this is a trade we actually took last night. So this is a trade that we actually took last night, and if I go over to, I think it was on the 1 hour daily time frame. So if you guys haven't seen my last video, the one I posted on YouTube on, can't actually remember what the title was, but I think it's to do with the probably trading masterclass or something like that. And in that video I used a lot of boxes to give you kind of different explanations on try to explain, try to give you the best chance. Like basically, if you're trading this kind of strategy, this is basically the kind of strategies that banks and hedge funds use, and obviously, like, it teaches you to trade in a way that it kind of like eliminates a lot of emotions, because obviously as a retail trader we're all taught, like when you're learning how to trade, for example, you see a consolidation here, or let me delete this box, or you see something like that where people are gonna put like a trend line for you there, and they will say, okay, as soon as the market breaks out of the trend line, you buy, the market goes up. And the thing is that a lot of the time the market is gonna go up. The market will go up, and that's probably what you're gonna get. But the thing with this kind of strategies, you never know where to take your profit, in terms of like, because you're really kind of in the middle of nowhere, really. So and if you trade like this constantly, I mean, so many times sometimes the market is not even going to go as high as this. Sometimes the market can just make a little high there, and then it's going to drop back down, and it's going to leave you wondering like, what have you done wrong? Have you done your analysis wrong and things like that? But there are ways that you have to. So this strategy kind of puts you in a, if there's a lot of patience involved. I'm not gonna lie, when you're trading this kind of strategies, there's a lot of patience involved, because you have to wait for a lot of things to kind of fall into place. And the reason why we took this trade is, first of all, we identified this this box, the consolidation or channel or flat or whatever you want to call it. It's a consolidation, and this is usually what the market does. The market, you know, doesn't trend 100% of the time. In fact, the market are in consolidation. I think people say about you know, most of the time the markets are in consolidation. So when the market comes into a consolidation, it breaks out of that consolidation, and this consolidation, you might hear some people refer this as a contraction phase. So the market is let me just double check. Okay, good. So see, everything seems to be going well. So this is known as the contraction phase. So in this contraction phase, obviously that's when the market kind of consolidates. That's when people are getting a lot of orders in, and obviously straight away when the market breaks out of this consolidation, that's not the market telling you which direction it's going to go to. I mean, I like to call this a trap. This is the trap where a lot of people get trapped in this. You know, as soon as the market breaks out, everybody panics, or they buy, the market is going up, and then as soon as you buy, the market goes up a little bit, and then it drops all of a sudden. And so with this strategy, you know, this is the first sign that you look for. You try to identify the contraction phase, or the, you know, consolidation phase, or the channel, or the 1 2 3, or the, you know, there's just so many of them. I mean, obviously with the flat, there's so many of them, and I'm not gonna go into details too much into this, like I said. But yeah, so just, you know, this is not a video of, you know, me giving you lessons and things like this. Is just a, you know, live trading, and I'm gonna show you the reasons why I've taken some of my trades, and also we're gonna go through the day, and I'll show you guys what the market is likely to do. So you get the contraction phase, and the market kind of start. This is the beginning of the expansion phase. The market comes out of the expansion phase, and most of the time the market will retrace. As soon as it breaks out, it will retrace, because I told you that is the trap. So once it does that, people get in, and then so all of a sudden the market just start retracing. So where it retraces back to is something that you have to kind of it's something that's, it's not easy to kind of predict, because the market can come back to previous structure, which is here. We have a previous structure here. So you're gonna see, and sometimes the market will come back to the previous structure and then bounce back up. Sometimes it will come back down to the middle. So the middle line is usually the strongest point of the this is what I usually call the decision point. And when I go to explain the next trade that we took, and you're gonna see the reason why the decision point is very important. So this is the decision point. So wherever the market stays, either above or below this line, it's going to determine where the direction of the market is likely going to be. But the market could also come all the way to the previous low here. So this is the sign that I usually wait for. I usually wait for, see the contraction phase, see the market breaking out, and then see the market retracing back to the previous low. Once the market accomplishes all these signs, now I would wait for what the market does in the middle line. So because whatever the market does on that middle line will determine where the trend is going to go. So last week we actually took a trade, me and my trader, we took a trade here where the market came up above the middle line. Satul gave us a buy setup. We bought this, but as you can see, we had a rally, but the market didn't quite get to the previous high. So eventually the market came back down, took us out for a small loss on that. But then yesterday the market came back up above that line again. So as long as the market stays above that middle line, it's gonna eventually go up to the high. So we're already currently in this trade now, but it's likely, you know, that this the profit is not likely gonna get to our level maybe onto, you know, Thursday or Friday, because it's, as you can see, it's on the hourly chart. But yeah, so moving on to the next one. The next one is actually it's on the 15-minute time frame. So with that one, you can actually see how those strategies work. So this one is gonna get probably a bit more complicated, because there's a lot of explanation that I need to kind of show you guys. And let me just double check and make sure everything is going well. Into all of that strategy, to me it makes sense. Banker strategy, buy, greatest you ever had. Wow, thank you, Knox, for everything. You're doing a good job. Thank you guys, and thank you guys for supporting. Anyway, so we're getting onto this. So this is gonna get a little bit. So what I'm gonna do is I'm gonna delete all of these drawings because it kind of don't want that to confuse you straight away. So we're gonna go into. So we're gonna start afresh. So guys, you remember what I told you about boxes, drawing boxes in the consolidation area. So I'm gonna go here. I'm gonna start here. There's another box here. I'm just gonna draw boxes on all the places where I see consolidation. It might be small, it might be huge, it might be I mean, you can say that's a lot. You can draw a box there, you can draw a box here as well. And currently the market is making under consolidation. So just those areas that I drew boxes are. I'm gonna start with drawing lines in the middle of the boxes. Lines in the middle of the boxes. And lines in the middle of the boxes. And you're gonna see how actually this thing works. So first of all, we're gonna start with the top box, but just this thing is kind of like getting in the way. So I'm gonna delete that first, and I'll talk about the first box. So we got the first box here. So we got a contraction phase, we got a market breaking out, coming back down to the line. You see the reaction that we get on the middle line. So the market breaks down to the downside, and then we had a rally back up to that middle line. So this is actually one of the trades that I actually took on Friday. But however, because I took this trade way close to where the market closing, basically it was on Friday evening, and I saw this box, I saw the market coming back up all the way there, but obviously, like I said, the market closed maybe probably half an hour after the market kind of gave me the sell signal. So this is one of the trades where I knew the market once it comes back to that middle line, because it's already giving you a sign there that it's going, that this is okay. There's one thing that also you need to know about this strategy. The higher time frame kind of dictates where the market is gonna go. So if on a higher time frame the market is bearish, and you see a strategy like that, usually it's better to take short trades instead of long trades. Because if you're looking at this, obviously in this direction you see the market going up, the general trend here is up, yeah. But unless you get a proper buy setup, and even the buy setup you get is always going to be short term, you have to use very, very tight stop loss. So we could have had a situation on Friday where the market come in, breaks above that center line. If you give me a kind of buy setup in the form of I don't know if you guys are familiar with you know what a buy setup is. So the market come above the line and kind of gives you a little correction like this kind of correction, I will be looking to go long on the market. However, if the market does this, comes into the middle and just drops straight away, this is your signal to sell it. And I'm going to show you exactly why that's a good idea, because the market did exactly. Because coming into this second consolidation, and this is why we took the trade this morning with my traders. So you see, we had a second phase here. So the market made this consolidation, breaks out of the expansion, the contraction phase, comes back straight to the middle line. This morning I was waiting to see if the market is gonna. So with this kind of trade, you can go either way, but you always have to remember the trend on the higher time frame. So I was waiting for this market this morning to come in above that line. I gave me a kind of a buy signal to go long, or I was waiting for the market to do what it did there. Just give me that big red candle, and then I know the market is going down. So that's why we took this this sell trade. So this morning we got in, actually got in a little bit later, because I've got the red candle, and so this is actually a trade that I also posted on TradingView, on my TradingView page. So as you can see, it's currently in profit, and now we are at the point where the big picture will always come into play. So remember the first box that I drew here. This is the first consolidation, or the first contraction box that I drew here, and look at what happened at the middle line. So you see that drop that we had on Friday, the market came onto the middle line, and straight away it went up. Yeah. Now we had the market coming back to the middle line again, and we're getting a reaction. So now, obviously we have a dilemma, because based on what I just explained to you, is the fact that if the market is if it's above that middle line box, that's likely going to detect where the direction of the market is going to go. So based on this bigger box, this market is likely to continue higher. However, based on the trade that we're in right now, and based on this structure that the market is making, you see this is a structure where the market made a move down and is giving you that kind of correction. This one always breaks to the downside, right? But I'm not going to be surprised if the market kind of takes it, because this correction, it doesn't mean that 100% of the time the market is going to break to the downside, because we have to remember that we are at a very, very good decision point here as well. So this market could start crawling all the way up there, but like I said, on a higher time frame, on a much higher time frame, if I put this up on a 4-hour time frame, you're going to see that we know how the market has been trending down. So at any moment in time, this market is likely going to continue moving to the downside. So at this point, it's just about being cautious and knowing the fact that, okay, this can actually give me a losing trade, because the fact that we're on this this middle line, above the middle line of this box, we can actually go higher. But even if we go higher, I know on the fact that on a higher time frame, the market is bearish. So we're going to see, obviously, in the next few hours if this market ends up breaking to the downside. But if it does break to the downside, like I said, the first stop here, this is where our profit is we're going to take our profit level. We take our profit level there, and then we're going to see the reaction. But because this market can go all the way down there and still bounce back up, if it doesn't go up from here, it will go all the way down here before going up. I prefer it to go all the way down, obviously, to the bottom of the box. So this it can get complicated, because obviously, like, when you're doing day trading on a 50-minute time frame, you have to be able to, in this situation, because the market there's so many, as you can see, there's so many consolidations, and those consolidations can be like, can be difficult to trade if you don't know this strategy completely, because there's so much to know, because you have this, me just explaining it to you here on the chat, it might not be, it might not make sense to you at first, but there's just so much to know. So as you can see, there's so many boxes, so many lines, and you have to be able to understand what you're looking for and where the market is likely to go. And but obviously, as soon as the market breaks, comes out of this consolidation, starts going down, we're gonna move our stop loss to break even. And so the reason, I think earlier I did move my stop to break even after this move, but then I changed it again because of these structures, because this structure it can't keep going on. Like you see this structure here, guys. You see the way it went all the way up. If we bring our Fibonacci, we're gonna see the market came into, it retraced all the way to the 886 retracement, but eventually it breaks down. So as long as this this structure is likely to break down, the only time where I don't think the structure is not gonna break down is if you come and close it above this previous high. And if we bring in our Fibonacci, we can see that currently the market is on the 50% retracement. So I wouldn't be surprised if it goes all the way to the 786 or the 886 retracement. And one thing that you have to also actually keep in mind is the fact that we do have a potential trend line here, a trend line resistance. So this market does have some way to go. So it can still go all the way to that trend line before it drops, and that trend line is gonna put us, is there any Fibonacci confluence that, yep. So that's going to be exactly the 61.8 retracement. Now we know how important that 61.8 retracement is. So we're going to see over the next few hours whether the market is gonna go all the way to the but like I said, it can drop from this moment at any time from here. The market can drop, because this structure is a structure that will drop to the downside. So we'll see, and it could be a situation where we have the market, it can drop all of a sudden and then rally back straight up, because I told you this middle point is very, very important. The middle point will decide what the market is going to do. So the reason I think why the market is likely to come all the way down to the bottom is the fact that with this, usually with this kind of consolidation, this is kind of like a 1 2 3 4 5, and we're at the break of the previous structure. So this is the trap. So after the trap, the market usually comes back all the way down to the bottom of the shadow. But the way it's coming down here is kind of like very, very choppy. So I wouldn't be surprised if the market doesn't get to the bottom of the line. But obviously this structure will tell us a lot more. So let me see if you guys have any so if you guys have any questions that you would like to ask me in terms of trading, or any trading questions that you want to ask. So as we wait for this trade, you can ask your question, and I'll try and answer you guys as the best way I can. So yeah, so I'm waiting for your questions, guys. Drop it in the live chat. It's actually the first time I'm doing all of this because I've never done it before, so we'll see if you guys like it or not. If you do like it, obviously we can continue. I might do another one tomorrow, just because people don't really have anything to do apart from staying at home. Like I'm sure this situation is affecting almost everyone around the world, so why not just stay at home and trade, why not just stay at home and trade? So I'm waiting for your questions, guys. And so Michael Doron said, do you ever, this is one of my WhatsApp group members, do you ever use buy stops and sell stops? No, I don't ever use buy stops and sell stops, and that's the reason why is because with this kind of strategy, for example, let me just find an empty. There's a few things that I look for, because I it's all about the entry for me. So the reason why I don't use sell stops and buy stops is because one simple reason, and the very common and obvious reason, is the fact that when the market is retracing, let's say the market is retracing from so once the market comes out of the contraction phase, so once the market is retracing, the market, like I told you, the market can find, if it meets the first structure level here, which is support level, the market can reverse on the structure level. It can either reverse on the first structure level, the middle point, or the bottom point. So I never know where the market is likely going to reverse. I know where the market is highly likely going to reverse. I know where it's very important. For example, the middle point of the chart is very important, obviously, because that kind of determines, based on the whole direction of the market, like the based on the trend of the market on a higher time frame. So and obviously my strategy it's a lot to do with the entry, like I said. So if you remember the last example I told you, this is the trade that I didn't take on Friday. It's actually a carbon. We're getting a carbon copy of that trade. It's only the fact that this one didn't just go straight down, but this is exactly the kind of the trade. So if you look at the Friday trade, so once the market comes to this middle line, I wait for two things. I wait for a break, a correction. Oops, that's not. So I wait for a break, so the kind of break that we got there with that green candle, and I wait for a correction like this, and then I take the trade. Once I see the correction like this, I don't usually wait for the break. I just take the trade, because once the market settles above that middle line, 9 times out of 10 it's gonna go up. Or you can get this. So because I'm either way, I know what the market is either gonna go. The market can go either direction. Obviously the higher time frame, like I said, is going to dictate where the direction is likely going to go to. So in this case, we're bearish on a higher time frame, so most of the time you get this kind of trades, the market is likely gonna be bearish every time it gets to the middle line. So I get a massive green candle. But you have to also realize, guys, that this is kind of like, it's not the same as the 1 2 3. I know you guys might have seen my 1 2 3 strategy. So with the I'll probably talk a little bit about that on the 1 2 3 strategy, but But in this case, I don't use buy stops or buy simply because of the reason where, I can only I can only react when the market actually does what I expect it to. I can't use buy stops and buy lows. I mean, you can if you want, but sometimes the reason is sometimes the market can go. You can get a huge spike above this level, and the market can just go straight down. The market can do that, and I'll show you an example where the market did that. So you just have to wait. It's all about waiting. You always have to wait when the market gets to the middle line, because whatever it does on the middle line will detect the direction of the chart. Like what we're getting here, we're at the middle point, and the market is giving us a kind of a sell setup. So in this situation, I am 90% on the short side, simply because of this structure, and also because of the fact that on a higher time frame the market is bearish. I'm only 10% long that because of this this little consolidation that we got there. So the market can still go up, but however the chances of the market going there is a lot higher on the downside. So yeah, so that's simply made one of the main reasons, because that's why when Doron, you're on my WhatsApp group, you see every time I send you charts, I don't I just give you a price range on which to buy. So the one I send the charts is because of the market at that point has given me that signal I need to get onto the trade. So I mean, the only time I use buy stops and sell stops is when I use my the advanced pattern strategy, which is not really the most successful strategy, if you ask me my opinion. But yeah, I hope I answered your question. So let's see if we can yeah, so if you guys have any more question, that was a good question, by the way. So if you have any more questions, guys, just drop it and I will go over it. So so probably while we wait for this trade, let me just kind of look at what the other currency pairs are doing. So the euro card looks to be moving in that direction. That is a lot higher time frame. So let's see what the other trades. So as you can see, I've got a couple of boxes here on my chart as well. This is another of the New Zealand trade. This is a trade I think that I was waiting to take last week, but didn't get it. So this is actually a trade that we took. This is another trade that we're actually in, me and my traders, and we're currently up about 400. Well, it's now about, yeah, we're currently up 500 pips on this trade, and I'll show you guys why we took that trade. So this is very similar to the Euro card trade, yeah. And did we take this on the 1 hour, on the 4 hour time frame? I think it was on the hourly time frame. So on the hourly time frame, so you can see what we had here. This box can actually extend all the way there. So we had this this big consolidation in this box, and then we had the trap here, and then we had the market retracing back to the middle line, and in this case the market came all the way back down to the previous structure low. So up to this point, so once the market breaks out of this channel, you don't do nothing. This is where patience is important with this strategy. The market breaks out, you don't do nothing. The market comes back down here, you don't do nothing. You always wait for that sign. So we had the market coming back all the way to this low, and we had the okay, this is one thing. I'm gonna have to explain this to you guys as well. This is probably one of the ways I've had to improve this strategy. And so before I talk about this, let me just give you a tip that probably, to those of you that are trading this strategy, is gonna make a huge difference to you. Let me make something that's gonna be, so I hope you guys are gonna be able to get this, because it might get a little bit more complicated. But it's best if I explain this with the 1 2 3 strategy, and then I can try and give more examples. So we had a so with the 1 2 3 strategy, you know how that one goes. You get an impulse leg, and then you get a correction, the 1 2 3, and then obviously you get the trap after the trap. So let me just put a little box on here. and I'll show you guys. This is the every single step that I wait for before I take any trade. And these steps are very, very, like, if the market doesn't do that, I don't take the trade. And I'll show you guys the reason why this is very important. I'll show you guys a few more examples on the chart of the market doing exactly that. Also, obviously the GBP CAD trade that we just took. So the market gives you the 1 2 3, it breaks out. So this is the trap that I'll call you, I just mentioned. So the market, after giving you that, it comes all the way back down to the previous structure low, right? So this is what the market usually does sometimes. So the market sometimes, this is what it does. It doesn't come back down in a straight line. It's probably gonna do something like that, and then like that. Yeah. So this is what I find out. Like one of the ways where I'm very, very strict with my strategy. One of the ways that kind of gets me a good entry, especially with the 1 2 3. So with the 1 2 3 strategy, every time the market does that and breaks the bottom of the chart, this is the movement. So the first time, if the market starts coming back up, the first structure that the market is going to meet on the way, either this structure low or this structure low or this structure low, at one of those structure points, the market will give you a reaction. So the market will come into that structure point and it will give you a reaction respecting that structure. And then this might seem like a little bit crazy to you guys, but trust me, this is pure structure reading. I'm not doing this, you're not going to see any indicators or anything. This is just pure looking at understanding the way the market moves, and every single move that it makes is very important. So this is what the market does. So just put this in your brain, and then I'm gonna go over to the chat and I'll show you guys, and I'm gonna call this the test. So then once the market comes back to the previous structure here, we have that's what I call the test. So it tests that level, comes back down, and then it goes off. It goes, obviously going off. Then here is gonna, that's on the next obstacle here. This is gonna determine where the direction is gonna be. But usually when the market does this, gives you test the previous structure, comes back up, and it gives you a correction there, and then it goes, right? So let's go over to the chart now, and I'll show you guys. So put this, having that mind on that what I just showed you here. Look at what the market did here. So this is not a 1 2 3, by the way. This is just a normal consolidation, normal contraction. So we got the contraction here, we got the trap, and we got this. Look at this movement, down, forms a structure, down, coming back up. This is the previous structure, right? Look at that test that we got. The market came, respected that level, that previous level. We have a level here, a structure level here, and a structure level, these two structure levels. The market came, respected that structure level, and then it rallied up. So we took the trade somewhere there, me and my traders, and now I wouldn't be surprised because we're clearly over the middle line here. So I wouldn't be surprised if this market crawl all the way to the top. That's going to give us close to about, I think it's about 1,000 pips profit. Yeah, but the whole point of this is just about putting this image in your head, guys. And I'm going to show you countless of examples where the market does exactly the same thing. This test is really important. I mean, when I first started trading this strategy, I think I've taken a lot of loss, because most of the time once the market breaks that previous structure, I usually just wait for so once I get like a huge green candle or something like a little impulse leg with a little correction, so I usually just buy it, and most of the time the market will just reverse straight away, because what I didn't realize was the fact that the market, it's coming against a structure. As soon as it comes against, sometimes it even goes all the way down and just pops back up straight away. So learning to be able to wait for this test is really, really important. So the most important thing about this strategy is just this test, and also the consolidation, or the way the market behaves once it gets to that middle point, because it can still give you a test, come back down, goes to the middle point, and drop back down, depending on the trend on the higher time frame again. So there's a lot of when trading there's a lot of things that you have to put in perspective. But this is just purely structure reading. This has nothing to do with any indicators or anything. All you need is just to be able to draw a box in a consolidation and be able to kind of read the structure. So, but anyway, that's the reason why we took that trade. And if I actually go take all these drawings off, and I'll go on the lower time frame, on the still sticking on the pound card, on the lower time frame, and I'll show you guys that this is just like a mini. I'll go to the 15-minute time frame. Sorry guys, let me just kind of play around with this. Sometimes when I change the chart, it's okay. So going back up, so looking at this on a 15-minute time frame, this is just kind of like a mini version of what we've seen on the higher time frame. You see that? We have the consolidation here. We had the trap, right? We had the trap there. The market comes straight back down, rallied. Where did it come to? Previous structure. That's the test. Respected that previous structure, and now the market crawling back up, straight up. And then we had a mini. Like I said, this is on a much smaller time frame. I saw this trade last week, but I couldn't send it to my group because already the market is we're already on a longer time frame chart. So you see the market give you that test. This test is really important. Comes back to the middle line, goes above the middle line, gives you a correction above the middle line. So this market is going, and it's just gonna keep going up. So I'll show you guys a few more examples as well. Let me just see if I can answer a couple more questions before I show you guys an example of that. Ready, high interest. So can you do another pair? 12 of you are watching, and only. Yeah. Oh, thank you. So anyway, can you do another currency pair? Of course I can do another currency pair. So based on that thing that I just showed you right now of I'm gonna go to a different currency pair, obviously, and I'll show you guys. So let's just check on our trade. It's still in that corrective phase, like I said. So let's see. We know hopefully before the end of this trade, the market is likely going to go down. So, but anyway, staying on that note, I can't really show you guys on this one because this is a totally different strategy. But staying on what I just showed you based on the 1, 2, 3 and the test. Let me go back to Nasdaq 100. That's another currency pair that actually works well with my strategies. So let me remove those drawings, and we're gonna go a little bit way back actually, because I had okay. So looking at this situation here, before I do anything, let me just put a couple of my boxes. I always do my this helps a lot, guys. If you are able to just go on your chart, put those boxes on those consolidations, that's gonna help you a lot, because that kind of gives you the tells you the exact place to kind of enter a trade. But obviously you always have to wait for what the market does at certain points, like within the box, either the middle point of the box or the bottom channel or anything. So looking at this, so I'm gonna use the top box obviously, and to make that example that I did. So we see the market here coming into, this is the 1, 2, 3, a classic 1, 2, 3, and we had a test. So this is our test, guys. A lot of people get caught in this test. Don't ever be those kind of people. If you understand how to trade this strategy, you're never gonna get caught in that trap. So we got the trap there. So look at the movement of this market here. Down, set a structure level, down, and look at the market coming back. Where did it come back to? Previous structure. This test is really important. Back when I was trading this strategy, I think that when I first, because this is probably what a lot of people don't know about this. So this is not a strategy where I didn't learn this strategy from anyone. I think how I came about this strategy is basically just kind of, I was making a lot of changes as I go. So if you guys probably like, you know, I've got this one of my track records on trading on my FX book, where I was trading for, like, you know, try to understand the structure, because I used to trade price action before, but this is kind of a strategy where I developed over, it took me probably a year to kind of understand the, you know, how to trade it completely. But it's a strategy that I kind of, you know, stumbled up. Well, I didn't actually stumble upon it. You know, that's why, you know, the names of the strategy is probably it's not gonna make sense to a lot of people when I use 1, 2, 3 or channel, or, you know, with the outside return and the starting point. Obviously, this is something I saw on the chart just by looking at the chart. And when I first started trading this strategy last year, obviously the first 6 months, you guys can see that my other track record on my, I think it should be on most of my videos on YouTube, although I do have a better track record on my website. But yeah, so when I started trading that strategy, the first 6 months of me trading that strategy, I was using kind of like it was a very, very conservative money management, where I was risking just 2% of my account on every trade. And I wasn't really going anywhere, because I mean, I was taking winners, I was taking losses, but obviously back then all I knew was the fact that, okay, the market, I just get the market. So I get my impulse leg, I get my 1, 2, 3, the market breaks, and once the market comes back to the previous low, I just buy straight away. As soon as the market breaks that previous low, I buy it. And a lot of the times I got lucky, the market, you know, comes back straight up and it gives me a profit. And sometimes the market can just go straight down, because sometimes the retracement here can go all the way a lot deeper. As you can see in this example, look at the 1, 2, 3 here. Look at that that retracement all the way there. So imagine back last year when I was trading, I would buy right there, and obviously I'll see that and I'll get excited, and then whoosh, the market goes all the way down, takes me out of my stop loss. But then obviously I started to kind of, you know, make changes, because obviously after I saw that, I was like, okay, so there's something that's happening here. Sometimes the market doesn't just reverse on a dime just because it got to a structure point. So the market, so when I saw that, obviously I tried to correct some problems. So, and the first problem I corrected was the fact that I kind of developed a way of waiting. So once the market breaks the structure, I wait for a signal to buy. And the first signal that I was going by back then was just, as soon as I get a candle, or 2 consecutive green candles, or a huge green candle, or like kind of a bullish engulfing pattern, I go in and I buy it. And that worked for a while. I think that was one of the main reasons where, if you guys check that old track record that I have, you're gonna see that in June and July I made some crazy returns where I was making over 100% returns in a month. But obviously the reason I did that was because once I figure out, like, I needed to wait here and get some kind of a confirmation, so it gives me a better chance. It made me improve the strategy. So when I did that, I think that for the first month or so, I was looking at my results were improving. And then one of the things I actually looked at on my FX is the fact that, see, this is why my FX is really important, was when it comes to like entry, sometimes it tells you where, like, for example, how accurate your entry points are. So after I made that changes, I looked at some of my entry points, and I realized that I was having 80 to 90% entry accuracy. So that means that every time I place a trade, I'm hardly ever in drawdown. So that was what made me increase my lot size. And in June and July, I made over 120% returns. I think in July I made 120% returns, because I kind of tripled or even quadrupled my lot size once I get that set. But obviously, like I said, if it doesn't go my way, then I will likely end up losing on that trade. But for a while it did, like I said. But obviously, again, I needed to make more changes, because obviously when I had losses, the losses were bigger, and I needed to make more changes. So that's why. Then I came across the realizing the middle point as well, and I realized the fact that sometimes when I place a trade, the market will go up a little bit, and then it drops. So then I realized, okay, this is. Then when I looked at a few trades that I placed, and I realized, okay, the middle point is really, really important, because at that point I only knew about the resistance and support. You know that's what you're told. When the market gets to a resistance, a support line, that's where you trade and things like that. But the middle point kind of opened my eyes, and obviously After that, I decided to make more changes again. The more changes in terms of like things like, okay, when the market gets to the middle point, if I'm in a trade, I'm in profit, I move my stop loss to break even. But obviously, again, I have to realize pay attention, to understand that, okay, if the market is trending in a certain direction, that middle point determines, even though it's very critical, but it doesn't really determine the direction of the market. The direction of the trend on a higher time frame is what determines where the market is going to go. And obviously, that's where I had to make another changes. And then the final change I had to make was this test of realizing, okay, the market does this all the time, like so many times on all the trades I take. So that's why it actually made me to be even more patient. So you see the progression. So back in the, year ago when I was trading, the market comes out to the previous structure, I just buy straight away. But however, that taught me I have to be patient. So first, patience is waiting for that signal, bullish engulfing pattern, or some kind of a corrective pattern, kind of a reversal pattern. I was patient enough to do that. But then I had to be even more patient, because now I don't even take a trade. Once the market comes out to the previous structure, that's just for me to just observe and see what the market is going to do. I see the move there. I see this kind of move there. I still observe. I mean, like I said, in this situation, if the market was to give me a correction here, then I will take it. I will take that trade. But as you can see, every time it goes to the middle point, it just drops. But the fact that we had the 1, 2, 3 here, if I, getting this test, the market coming back down, and once it's coming back up, this is my signal. This is where I usually get my trades. And then it gives me little or no pain. Obviously, like I said, coming back to the middle line again, there's going to be a huge decision point. So you can see what happened here, guys. Go to the middle line. It didn't really, I mean, this is kind of, you can say this is so this is one of the few situations where if you take a trade here, then you are going to actually end up losing, because this market gives you a classic buy signal here, but then it went up and then it dropped. And the reason it's dropped is probably because the market is bearish on a higher time frame. If the market is bearish on a higher time frame, that middle line, it's, the direction is always going to be down. So even though we had a buy signal here, you would have been really, really cautious. If you understand this strategy, you would have been very cautious in terms of, putting a tight stop loss or not going in too hard. But yeah, the whole point is just to explain to you guys why this test is really, really important. You don't just go on obviously if you're trading the 1, 2, 3 strategy. So let me look at some of your questions. What is the best time frame for this strategy? Okay, I'm gonna do people's Nesty. I'm gonna do your I'm gonna look at another currency pair for you, obviously. But just to answer this question, what is the best time frame of this strategy? What is the best time frame? I find the best time frame is definitely the 15-minute time frame. Is the best. However, it works on any strategy and any time frame. Sorry, because I do have trades that I take with my traders on a 4-hour time frame, on a 1-hour time frame. It's just that it takes a bit longer, but it works on any time frame. So in terms of me doing another currency pair, so let's see, currency pair. What are we gonna look at? Let's look at the pound. Let's look at the pound. So I can see a lot of consolidation, but the fact that I'm not seeing enough retracement, so I'm not really interested in those kind of consolidation unless the market. So here we go consolidation here, right? It looks like the market is about to break out of this consolidation. So obviously my plan is, obviously, once I see this, I wait for that. Oops, hold on a second. Yeah. So I wait for that. For the trap, I wait for the market to come back to the previous structure. I wait for the test, retracement, and I take my trade. That's where I take my trade. And obviously, like I said, the middle point will determine where the direction of the market. So it looks like the market has been trending, even though it's trending down on a higher time frame. Is it? Let me just double check that. Let's go to the 4-hour or to the daily. Well, it's been bearish, but this huge retracement that we had is a huge impulse leg, so I wouldn't be surprised if the trend is completely reversing. So so I'll be perfectly comfortable taking a long trade on this if I get this movement. The market breaks out the contraction phase coming back, I will have to wait for these signs, and then obviously the middle point is going to determine. So this is actually a trade that we took on this currency pair with my trading group, and this is it. Let me just bring in my box. I think it was a short trade, wasn't it? Yeah, it was a short trade. We had a long trade and a short trade. So going back to the same principle, guys. You see the box, you see the consolidation, you see the market breaking out, you see the market coming back down. In this situation, obviously, we didn't get a test that was sufficient. So here we didn't get any test. So the market just come back up, and look at the consolidation above the middle box, and you get your trade to the upside. So the middle line is not. So it's not always that you're gonna get the things that you always get the test on the 1 2 3 strategy, not the channel one. So in this case, we just see a nice move all the way up. But like I said, if you were to trade this is where you would have gotten your trade, right here. The buy setup you had above the middle line of the box, that would have been your trade. But again, because this at this point in time, this was bearish on a higher time frame, so you would be really cautious. So ideally you would be looking to be going long in this market, to go short, sorry, because the market was bearish. But like I said, you had a perfect trading opportunity there. So maybe I'll try and do some kind of so guys, keep coming your questions, keep bringing in your questions. I'm gonna obviously if you have any questions related, it doesn't have to be like on the trading itself. It could be on, I don't know, trading books, movies, or anything, or that you guys want to kind of improve your knowledge on. I know I've got one of my students, not actually students, one of my WhatsApp group members, that he just started trading a couple weeks ago, and he is going really crazy. I mean, in terms of this guy is chasing knowledge, like he's grinding, because the guy, he hardly sleeps. He doesn't sleep. He goes all night, looking at information, reading on things on the internet. I think he knows I'm talking to him right now. I mean, it's good. It's good to see that someone is actually put in everything just to make sure he learns how to trade. And I mean, that's what you gotta do, man. If you wanna make it in this, sometimes you have to give it the time, the commitment, and the effort. And I think what actually makes it easy for him now is because of this lockdown. We're on self-isolation, we're on lockdown. He's got no option but to learn how to trade, really. So he just has to give it his all, and keep keep looking for more information on how to so guys, keep your questions coming. Obviously, looking at this trade now, we can see the market looks like it's about to come out of that corrective sell pattern. So hopefully the market, we're gonna get that move anytime in the next I don't know, half an hour, 1 hour, depending. But obviously I'll only keep going, guys. If you keep bringing your questions in, then I will keep the stream going. So it looks like the Canadian pairs are really rallying today. There was actually a trade that I placed on TradingView. Let me talk about that trade. Have to go on a higher time frame. And so for this, this is actually like, I mean, my strategy, what I trade, is actually a lot to do with is a combination of, if anyone was to ask me, like, can I describe my strategy? I would say my strategy is a combination of probably all the strategies I've learned over the years, and I just kind of combine them into a single strategy. Because if you look at my strategy, you are gonna see resemblance. There's gonna be some elements of wave analysis in there, and we know wave analysis how the market kind of makes an impulse leg and then it gives you a correction. Sometimes it can be a 1 2 3 1 2 3 4 5 wave correction, an ABC correction, or a flat correction, regular flat, contracting flat, all this type of corrections really. And yeah, so like I said, there's some elements of wave analysis in my strategy, and also there's an element of resistance and support, as you guys have seen it by the test that I've always I've just spoken to you about it. So that test is really really important. And also, like, obviously Fibonacci, I do use Fibonacci sometimes, like rarely. I mean, I just showed you guys how I use Fibonacci to kind of give me. So if I go back to the trade that we're currently in, I'm gonna actually just move this to the top because I don't want to scroll all the way down to find it later. Yeah, so obviously going back to this trade on a 15-minute time frame, and you can see how I've used kind of Fibonacci to kind of so even with the trend line as well. I mean, I don't use it all the time, but sometimes that can give you can put you on give you a good guide in terms of, like, yeah. So this not really, I don't really think you're gonna be able to to understand my strategy. You probably have to have a little bit of knowledge on a lot of different strategies. It's all price action, like I said. Of course, the strategy is price action. It's nothing to, I don't use any indicators or anything that you've seen. It's just simple chart reading and just drawing some lines on the chart, some boxes, and yeah. But I want to talk about this trade. So this trade that I posted on TradingView, that was not my strategy. However, it's a strategy that's based on wave analysis, where you had a huge impulse leg here, and now we got the ABC correction, and this correction comes in. I'm gonna delete all of this because you don't need to do that. If you want to see that chart, you have to go on TradingView. So and obviously this correction comes in at the previous structure, but also the previous structure comes in at the 127 Fibonacci extension. So we had the 127 Fibonacci extension here, we had the previous structure, so this kind of determines where the correction will end. So the fact that this market is bullish on a higher time frame, I think this is probably one of the reasons why our CAD trade is working, because the CAD is weakening. So that's why the pound and the euro CAD are kind of strengthening against the CAD. So I wouldn't be surprised if this, like I said, this is my prediction, that the market is gonna come all the way to the top of that that trend line, and then depending on what happens there, we can either get a break above the trend line, a consolidation, and a buy setup, and the market keeps going higher, or the market can either go to that trend line and then it's gonna come back down to make a fifth wave. It can do that. It can make a so I wouldn't be surprised if we get a fifth wave, which will make a bigger correction, and then the market the market breaking out. So yeah, so there's actually a couple of people that have taken that trade, and good for you, because it looks like the trade is going in the right direction. So okay, so I'll look at some of your questions. Joe, patterns don't do them anymore. I've made some money just watching your videos from years back. Thank you for that. Patterns, you don't do them anymore. Okay, yeah, so this is the thing with patterns. The patterns, like, I mean, I still do them occasionally. I see if you've seen on the group chat, Gantu, you're one of my traders, so you've seen I do send a few patterns there. But the thing with these patterns is you have to be very very kind of like strict with the way you trade your patterns, and and I don't think they have a huge success rate in terms of, like, you know, obviously those patterns, they all come. If you understand wave analysis, then you can, you know, you are going to be able to trade those patterns and be able to be successful. But the thing is that it's really, you know, the patterns don't really have a high success rate. It's only a few of them. Well, just the cipher pattern, probably that's the one with the highest success rate. And you have to be able to, I mean, sometimes the fact that the patterns need you to, it's very strict in terms of the Fibonacci, the entry point. So let's say, for example, we're looking at this, yeah, we got the impulse leg. If we take our impulse leg from here to there, so we got a 50% retracement. So we're looking for a bad pattern here. So we're looking for the market coming to 886 retracement. So in this situation, you're gonna get really frustrated because the market didn't come into the 886 retracement; it came into the 786 retracement. And understanding structure, wave, and as you know why the market reversed here, simply because we got the structure here, we got the 127 Fibonacci extension, and we got the head and shoulders here. So we got the reverse head and shoulders here. You know, so you'll be waiting for your pattern, and you're never gonna get the pattern. You know, so in this situation, it's probably gonna make you really, really frustrated. But generally, I just find out that patterns, you know, if you trade patterns, the success rate aren't that great. That's why I try to, you know, I'm leaning more towards my own the strategy that I've developed rather than trading patterns. But occasionally, like I say, I do trade patterns occasionally, but very rarely. Probably once or twice a month. That's when you're gonna see pattern from me. But obviously, like I said, if you are very strict in terms of the way you trade your patterns, in terms of, like, you know, for example, you know, if you only trade, so for example, if the market is bullish, then you kind of have a strict rule where you only trade bullish patterns because you always want to be in the direction of the trend. So if you do it that way and you're very strict, then you can you can trade patterns successfully. But doing that just kind of, you know, I mean, I don't think you can do day trading with patterns, because I day trade for a living, so I can't really, you know, be looking at patterns, and because you don't find them all the time. And you know, with patterns, the rules are just there. You just have to follow the rules in terms of, you know, where the entry point is going to be, where the stop loss is going to be, and you don't really do much. So this is actually more challenging. This kind of day trading using this method is more challenging because it makes you have to react. We have to react to whatever the market is doing at any certain point. So yeah, so as we wait, this trade is still in the corrective phase. So like I said, this is gonna take a while. Let me see if I can. Okay, good to know. So yeah, so keep your questions coming, guys, and let's see if we can do some kind of some analysis on something else. So Bitcoin, I don't know how many of you guys trade Bitcoin, but there's an analysis that I posted on TradingView on Bitcoin, and let me delete all of these things. But then again, let me just, so if you look at this now, that's the thing with our boxes. The boxes work on every single time frame, every single currency pair, every single chart, everything. Just mark out the consolidations and you're gonna see. So now we go on to this Bitcoin. Currently, draw a line at our middle point. So here we can see, now you can know the direction. Now you know exactly where Bitcoin is headed, right? Just because of the box and the middle line that you drew. The market is above the middle line, even though we came back below the line. So I won't be surprised if this market go all the way up there. While at the same time, again, the higher time frame tells you that this is a correction, because we have an impulse leg here. So this is just a correction that will go down. But in the meantime, you're getting a proper long trade. You're gonna get a long trade on Bitcoin because you're clearly above that middle line. Especially if we get some kind of a consolidation here, then the market is likely gonna go. But clearly, you're gonna see how you're seeing how important that middle line is. That middle line determines which direction the market is always gonna go, and the market is always gonna react on that middle line. Now, can the market go down? Well, if you don't get the correction, like I said, yes. Look at this, because this is a 1, 2, 3, right? 1, 2, 3. We had a trap here, the market coming back to the middle line. So if this doesn't give you a correction, it can drop. But then the fact that the market has put in a structure here, and we go structure here, then expect the market to give you that test, and then it takes off. Obviously, again, depending on what the market does here. See, so it's all about, you know, reacting. You know, it's the technique is very simple, because you know exactly this is what you just wait for. It's just that there's a lot of waiting involved, and you need to have patience if you're trading. And the patience is knowing these two things, knowing this middle line, how important it is, knowing what the market, whatever the market does here, is going to determine which direction you're going to go to. Because simply from here, it can go in either direction. If it doesn't give you the correction you're looking for, then it's going to do this. And then once it does that, you just have to be able, you know, not to panic and you know, try to enter and buy straight away because you think the market is going to rally. Yeah, it might rally, like I said, but you have to pay attention to these structures as well, because this structure, yeah, previous structure support, now is going to act as resistance. But the market is only going to test it. It's not like it's not going to, you know, that's not going to be a resistance where the market is going to keep going down. Before it goes down, it's going to do something at the mid. It's going to come back to the middle line and give you a reaction. So let's see if we have anything. This is a 4-hour time frame, by the way. So on a 15-minute time frame, I doubt we have that setup. I would do, if you look at this, we do have the setup here. So on a 15-minute time frame, it's actually a little bit so as you can see, the market is just coming to that that middle line. So you kind of see it, but you can actually, you know better where the market is likely going to head after that middle line. If it doesn't break that middle line, and you know that on a higher time frame this market is bearish, so is there a possibility that we're going to get what we got on the US 30, where the market is going to come back up and then gives you a huge red candle and then it continues down? Yes, there's a huge possibility of that happening. Yeah, because like I said, this is, you know, you only have to look at these trades to understand what the market is. So you can see we're bearish on a higher time frame. Every time the market comes to the middle box, you get that reversal. So yeah, let me see if you guys have any more questions. Jamal says, sorry, what is a 1, 2, 3? What is a 1, 2, 3? So the 1, 2, 3 is just a corrective pattern. So basically, if you are, let me find a nice empty space and explain to you what a 1, 2, 3 is. So 1, 2, 3 is just a form of is a corrective pattern. So you know how the market moves. The market always makes a huge impulse leg, yeah, and after the market makes an impulse leg, it gives you a correction. So this is just simple technical wave analysis, where you have like 5 wave, 3 wave, where the Elliott wave, if you know Elliott wave, where the market will move, gives you a correction. So you have the wave 1, so technical classic Elliott wave, this thing. So we have a, use that drawing. So you have a wave 1, wave 2, wave 3, wave 4, wave 5, where the 1, 3, and 5 waves are longer because they're impulse legs, and then this is just a correction. This is just a correction. So the 1, 2, 3 is just based on the corrective pattern that the Elliott wave makes. So if you look deeper into this, what you're going to realize is the fact the market has different this can be in the very, very, like, it can get complicated, it can get simple. There's just so many corrective patterns. So if you're looking at the first, the simple and the most like easiest corrective pattern is just the 1, 2, 3. So it's just a wave. So here you have 1, 2, 3, 4, 5. You have a 5 wave here. The correction is usually in the form of a 3 wave pattern. 1, 2, 3. So that's what 1, 2, 3 usually means. But this correction could get really complex. The market could give you a contracting flat, an expanding flat, a regular flat, a 5 wave correction. It can give you different types of corrections. So my strategy is just based on understanding how those corrections behave and what the market does after those corrections, because the whole point is to be able to get on these moves, because the wave 1, the 3 and the 5, this long wave, this is where all the money is. You don't make any more money in the corrective patterns, but you have to understand these corrective patterns, you know. So that the strategy that that I trade is all about understanding those corrective patterns and being able to trade it. So I hope that answers your question in terms of what a 1, 2, 3 is. Gonna delete all of this and we go back to the chart. Still waiting for this corrective pattern to go, so let's see if you guys have any more question. Wow, I can't believe you guys are not asking any more questions, you know. I hope that answers your question, Jamal. But I can't believe you guys are not having so many things you want to learn in trading. Someone, you know, don't you have any kind of like things that you want to, in terms of like books or movies, trading TV shows, you know. When I was learning to trade, I was really into, you know, anything that has to do with trading. I always made an effort to kind of understand it, and or to kind of watch it, because I had a huge interest in trading. So yeah, so if you guys, you know, or if you want me to analyze any kind of currency pair for you guys, or anything, then you can, you know, this is your chance. And like I said, if this goes well, if you guys like this video, we can do this tomorrow again. But how long have I been streaming for? An hour and 20 minutes. So, and it's almost getting to lunchtime. So if you guys don't have any more questions, I'll probably be ending this this stream. Like I said, unfortunately this trade hasn't really gone anywhere. It's still, you know, correcting, so we're gonna see where the market is gonna go. But okay, Michael Doran asking, what sort of reversal signs or for a zone to hold or resist do you look for when price is approaching a zone you're interested in? Okay, there's so many reversal signs that I kind of and the reversal sign is all to do with understanding structure again. So let me go. So for example, if the market is, let's say, okay, for the sake of, I'm not gonna, you know, show you the whole consolidation, the expansion, the contraction, all this. I'm just go straight to the entry point. So if the market is coming back down and gets to the previous structure where I'm interested in, where the market is, I'm interested in going long in the market. So like I said, apart from waiting for, so if the test is out of the way, so this, because there's going to be some situations where the market doesn't have any previous structure to go to, and it's just going to give you a classic reversal pattern. So the simple and the easiest form of reversal pattern is obviously the double bottom. So if the market goes, but the double bottom involves the market going and testing the previous structure and then going back up. So the double bottom is one of the reversal signs that I like, and the other reversal signs I'm interested is one which is kind of like a corrective pattern. So you see the current pattern that we're getting on the US 30 that we're trading right now. So if we get that pattern, like for example, the market comes in like this and give you that pattern, this is a reversal structure, because this always breaks to the upside. I get this, the market breaks, I take the trade. Or we can also have the market coming back down, going back up. This will also involve a test. So we got the reverse head and shoulders where the market comes back down, and then so it will give you a reverse head and shoulders, and this will involve testing the previous structure. And also we can also have I mean, you can go deeper into having like kind of like a triple bottom, or sometimes, you know, if the market comes back to the previous structure and I get a huge impulse leg followed by a correction, then this is a reversal structure for me. I take so look at this. These are the kind of things that I kind of pay attention to in terms of reversal structures. There could be a few more, like in terms of like triple bottom, But like I said, that's just probably, you know, coming up from the double bottom. If you get a double bottom, the market is likely to make a triple bottom, and this is probably one of the few situations like where I used my RSI, but very very rarely. Like I said, I don't use it. I don't like using indicators, but sometimes if the market gives me this kind of signal, especially the double bottom, I sometimes look for divergence on the RSI. So for example, you know, if I get a bullish divergence in combination with the double bottom, then that is usually a good combination to trade it. So but that's the only times that I use my RSI. Like I said, I don't use indicators. However, if I were to use an indicator, I use an RSI, and only, you know, to kind of get the divergence conditions. But in terms of reversal side, this is what I look for. Yeah, double bottom, this corrective pattern, reverse head and shoulders, or this kind of pattern. But obviously everything, once I get, even if I get a reversal sign, I still have to pay attention to the middle line, because the middle line will determine a lot that the market does. So I hope that answers your question, Doran. Do the time periods have any significant highs or lows on the strategy? Okay, so the thing with the time frame is just, you just need to kind of like probably this is one of the things I'm guilty of. I mean, if I was to be like more like focusing on, and like kind of, if I was to pay more attention to but sometimes when you're doing day trading, it's really hard to kind of, you know, focus on the higher time frame in order to base your decision. But the things that ideally that you have to, the higher time frame always plays a part. It should always, the reason why the higher time frame could be important is the fact that, okay, if I'm on a higher time frame, I know the market is trending down, like in this case for instance. When I'm trading, I wouldn't be cautious with my like stop loss and things like that. I would probably kind of like, in this situation, I have a really really wide stop loss, way all the way at the top. It's not a tight stop loss, but because I know the market on a higher time frame is trending down, and we got, you know, there's just a lot of things here. So on a higher time frame, if I know the market, if I'm in the direction of the trend, I'm not really cautious with my trading, because like I said, I know eventually that market is going to make a huge move to the downside. We might get a spike up. So if you're too too cautious with your strategy or with your money management, sometimes you might miss out. You know, the market can spike up, take you out, and then drops all of a sudden. So in this situation, you see the spikes. Sometimes it can spike way above the middle line before dropping. So yeah, so the time frame are really important. If you're basing the direction of your trade based on the higher time frame, it's really good to do that. Hope that answers your question. So tomorrow, trust me, I'll bring more questions. Okay, I'm expecting that. No problem, Darren. Thanks. We'll see you. Sometimes RSI don't work properly when the market is trending. Yeah, you're definitely right. RSIs don't. Yeah, that's indicators in general. It's a really really bad idea to use indicators when you're trading, because the indicators kind of introduce unnecessary emotions that you don't want in trading. Because indications only react when the move has already happened. So sometimes, yeah, I wouldn't advise anyone to use indicators, like I said. But you know, sometimes I do. But even if I do, like, it's just the RSI, and I don't really, like I said, I don't really use it that much in my analysis. Okay, so it doesn't look like you guys have any more questions. So yeah, so you just keep an eye on these trades, and yeah, I'll probably, like I said, depending on how this video is received, I will probably make another one tomorrow. Do another live trading, because we've got nothing better to do than sit at home and and just just enjoy the lockdown, really. So we might as well just talk trading and do stuff like this. Put my stop loss a bit higher. It's taking me out a couple of times. Yeah, I don't, I'm not surprised about that. And obviously with Kasim, your experience, you need to, you just see the one that's started trading a couple of weeks ago. So, it's gonna take you time to get used to all of these. Obviously, yes, it will take you time to get used to it. So yeah, so now that we've I understand how this stream works. So tomorrow, hopefully, I'm not gonna have too much of a problem getting the stream started. So, but anyway, guys, I think I'm gonna end the stream now because I'm hungry and I need to go and have some lunch. But hopefully tomorrow is gonna be a lot longer. Like I said, depending on how the video is received. So if you guys you don't mind, you can share it, and let's see. So anyway, I think that's gonna be the end of the video. So thank you guys for tuning in. Thank you guys for all your questions, and yeah, so hopefully I'll see you guys tomorrow. It's probably going to be around the same time, 11-12 in the morning, and yeah,